What's going on, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is April 28th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about Fed Wednesday. We're going to talk about the price action, the headline indices. We'll go under the hood and check out, oh my gosh, Apple adds $90 billion to their buyback and they raise their quarterly dividend. Let's go. What was I saying? All right, so we're going to talk about a bunch of stuff. We're going to go through options order flow. It's going to be great. All right, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, let's jump in here. So this is pretty awesome. So we got our Apple results here that just came out. And yeah, Apple beat on revenue. They beat on income. They're raising their buyback and they're raising their quarterly dividend. Let's see. Let's take a look at that reaction from Apple. Let's see. And we are up in the sky here. You can see we're actually not. We're up like it's like a good like 3% though. Let me see here. This is 133. Yeah, we're up like 3 or 4%. That's pretty solid. I wouldn't be surprised if we end up climbing a little bit more because those seem like really good results. It's awesome. Good for Apple. And that's another thing we're going to talk about. So coming into today's session, you know, we had a bunch of variables on the plate. It was like, all right, we have Fed Wednesday to worry about. We have these FANG earnings. What's going to happen? Is Powell going to talk about tightening monetary policy? And for that reason, I came in, I took a couple of positions off into Fed Wednesday, which for me was just, you know, the prudent thing to do. You know, regardless of the outcome, you know, for me, that's just like clean process. But yeah, you can see here the S&P 500, we ended up closing on the day. So for SPY, we finished down 0.03%. For the NASDAQ QQQ, we finished down 0.34%. For the IWM small caps, we finished up 0.17%, and for the Dow Jones, we closed down 0.43%. Okay, and I'm seeing Apple Q2 paid subs 660 million, up from 620 million. And then, yeah, it looks like the wearables also look good. Yeah, it's looking good. Let me turn off this news wire. That way it doesn't keep beeping here. Yeah, you can see, so pretty much a flat to slightly down day for the indices. Which was kind of to be expected. I mean, we had the Fed Wednesday, you know, not really much going on in the market in the morning. One of the things that, you know, I was keen on doing was I didn't want to overtrade in the morning because, you know, that phenomenon I was talking about yesterday where nothing's happening, so you trade a little bit more and then a little bit more, and then, you know, a little like 20 basis point move in the market comes and you start like stopping out, and it's just, you know, it's bad process. You can see here on our hourly chart, we tested that weekly value area. Well, we pretty much, you know, we stayed the course for today, and really just a sideways day. I think now that we got Fed Wednesday out, Powell said we still have ways to go before thinking about tapering the balance sheet. That's great news. That's exactly what the markets wanted to hear. And then we had Facebook, which beat their earnings. And then we had Apple, which also beat on their earnings. So let's take a look at Facebook. We're kind of going all over the place, but just because we have a bunch of earnings out, all these catalysts. So yeah, you can see Facebook is up to 325. Apple, let's see where that one's trading now. Yeah, up at 139. So yeah, this is pretty great. I mean, in order for the markets to make that next leg up beyond this 4,200 mark that we've been stuck at, I think this had to happen. if, Apple wasn't strong. And Apple, oh my gosh, Apple's about 6% of the S&P 500. So this is big. If Apple hadn't done this and Facebook hadn't done this and Google hadn't, I'd be like, all right, markets are looking kind of weak from here on out. But this could really be like that rejuvenation that we needed to bring us to the next level. Because, speaking of which, on the ES, the market's setting up very nicely here. So we had talked about this a couple times as well, where we had a sharp move higher, then we had this little pullback, and we're almost forming sort of like a cup and handle setup here. But yeah, nice little pullback and consolidation in time, and that took us off those like super overbought levels in the market. And now we've just kind of been like dojiing sideways for a couple days. So I really think we could get that push beyond 4,200. And to be honest, like since they said they're not considering tapering at the moment, really like what is there to stop the market from going to 4,500? Nothing, really. Like, every week for Pristine Capital members, I do like a top-down market analysis video, and we talk about the relationship between the Federal Reserve's balance sheet and the S&P 500, and it's essentially like a perfect correlation. And pretty much everybody's like, how are the markets going up so much? And if you look at the balance sheet, they're both moving in tandem. Now that we know that that's not going to be interrupted, and then we also got the biggest companies, blowing out their earnings reports, I think, knock on wood, I think this is a pretty good sign. So those are the headline indices. Now let's jump into our market breadth here. So you can see today the breadth was weak. We had 231 advancers, 271 decliners. Keep in mind, for the S&P 500, breadth does not have to be strong in order for the market to continue marching higher. There are a few companies, Facebook, Amazon, Netflix, Google, all those FANG names, and a couple more that make up a large percentage of the index. So like with Apple, if Apple is up 5% tomorrow, there's essentially like no way the S&P 500 can be down. We would need like every single stock, you know what I'm saying, like in order to bring this behemoth down. If you look at the Qs, also negative breadth. IWM had positive breadth. Then the Dow Jones, 14 advancers and 16 decliners. And if we look at our heat map for today, Microsoft disappointed on their earnings report. They were down 2.83%. You can see we had profit taking in the semiconductors. But yeah, Google had nice results. Facebook kind of ran in anticipation of their results. Same thing with Amazon. And you can see energy was very strong and financials. But overall, yeah, you can see here that this was a very mixed picture. Oh yeah, Starbucks was down as well. They kind of disappointed on their earnings. So it wasn't all winners today, but I think the stocks that really matter were winners. And then if we look at our sector sheet, you can see here, also very mixed. Standouts that I see are the solar energy stocks were down by 2.98%. Moving way out of the top slot, which they were in a few days ago. Enphase Energy reported, and they had bad results, or results the market didn't like. They were pretty much in line with expectations, but they were down, it was like over 10% today. And then you can see for some of the standouts, we had energy up 3.45%, and we had the YOLO Cannabis ETF up 2.67%. Yeah, those were our big standouts for today. If we look at our style factors, you can see really outperforming was high beta up 1.08%, and we had, I see high div, low vol did okay too. Our biggest loser was defensive, so that's a good thing if you have the defensive stocks that are coming off a bit. That's very risk on. All right, so let's take a look at some of my trades for the day. And keep in mind, one thing I was talking about earlier was like, okay, beginning of Fed Wednesday, I'm not going to overtrade. Not going to overtrade. So if you look here, I did find a day trading opportunity. So I got long some Starbucks June 18th, 110 strike calls for $4.70. Really what I saw was they had a gap down for their earnings. And there was a large call buyer that came in size, like $3.5 million block order. And I immediately pounced on it. And I was like, okay, I'm taking this thing for a day trade. So I closed half of it 20 minutes later for $4.85. And then I closed the other half. A couple of minutes after that, we got a nice little spike up for 510. So yeah, I put base hits on Fed day. So that was perfect. That was good enough for me for the beginning of the day, where I was like, all right, that's awesome. I snagged a little day trade, got a nice little base hit. I don't want to push it really from there. The other one that I also did in the morning, where was that? Oh yeah, these are my trades for today. So you can see I got long some Capri common shares for 55.54. I noticed from the morning that the luxury retail group looks very strong. So I said I want to make sure I have some exposure to luxury retail. So I hit that Starbucks winner for a day trade. And then I noticed Amazon was really ripping for the good part of the day. And it looks like people are anticipating, Amazon's going to have a good quarter, which I don't really see why it wouldn't. But I had an earnings trade on, which is very speculative. I had the 3,500 by 3,510 call spread on for Amazon for May 7th. And Amazon was really ripping. So I was like, you know what? Before Fed Wednesday, I want to see if I can dish this thing out to the market. So I put a limit order on. Where's this? Yeah, so I put a limit order out. And here, I pretty much said, like, hey, guys, like, I'm going for a run because I don't want to overtrade. But I'm putting out this limit order. Yeah, I said I'm going for a run, doing so to prevent myself from overtrading. Yeah, and I put that limit order out there. The limit filled. So I closed that out at $4.50. I'd pay $3.43. So I just said, a 30% gain with no earnings risk ahead of a Fed Wednesday, I'll take it. And it worked out because Amazon ended up dipping throughout the rest of the day. So if I had wanted to, I could have put this right back on. I think what I will likely do is I might trade an iron condor for Amazon, just because I think tomorrow Apple's going to go crazy. Facebook is also going to go crazy. And I think there will be those FOMOers who go, oh my gosh, they all just ripped. I'm diving into Amazon because they're about to report. And if this one really rips into the report and I see like a bunch of call buyers going up, that's where I will not want to go with a call spread. I'll likely just do an iron condor, betting on a non-movement. But we'll see. I'll take that day by day for tomorrow. And then once we were in that Fed meeting and, it looked like the chances of Fed tapering were off the table, I took a long position in CCJ common shares for $17.39. Uranium stocks looked really strong today. And if we look here at CCJ, you can see here, above those key moving averages, nice day of price action on high volume. So yeah, we'll see what happens there. And then the other one I entered was an IWM call spread. So the IWM right over here. I entered an IWM call spread for $2, the 230 by 235 for May 7th. And then I also took a target in my EEM June 18th 54 strike calls. I'd paid $1.80 for those. I took them off for $2.05. And EEM had a nice day. This one playing out the way we want it to. You can see we have this VPOC up here at about 55.7. But this one, just really for prudence, taking a target. And it did end up coming off for the rest of the day. So sometimes it can be mentally draining if you have a nice winner and you're like, oh my gosh, should I take some off? You don't take any off, and then it kind of goes the other way. Then that can be like, oh gosh, I should have taken some off. So I think when in doubt, at least for me, when in doubt, take a target, because then if it goes up, you're still happy. And then if it goes down, you're not really like kicking yourself like, oh my gosh, I was such a pig, I didn't take a target. So yeah, that was my trading activity for the day. And then we'll really quickly pull up our options order flow. You can see here, yeah, so we had a bunch of Tesla puts going up in the morning. A lot of different orders here, all over 1 million. You can see we had some Facebook calls for April 30th. This MDLZ. Let me take a look at MDLZ. Okay, I'm guessing they reported earnings. They probably had a strong result. Looks like somebody was buying calls. And you can see StarBucks. This was the order that prompted me to put on my position that I day traded. We had some Dropbox, some Amazon come down. This was like right around the high of the day. Somebody put these on. And then you can see, leading into Fed Wednesday, we had like these two hedges go up for the indices. Then as the meeting went on, you can see these players put on Apple positions. We had somebody positioning in Amazon, IPOE. That one has come up, the past 2 days. Oh, and I didn't even realize this one. It looks like an IWM position went up for May 21st. Let me see IPOE. I noticed there's some repeat call buying over the last couple days. Yeah, and this one looks like it's grinding higher. So I could see why they're positioning in some calls. This one it's a SPAC, one of Chamath SPACs, and it's acquiring SoFi. And then, IWM. So I positioned in a call spread. This one, to me, just looks like a beach ball that's underwater, where all these other indices are trading at their all-time highs. IWM, for whatever reason, is just like, oh, small caps. No way. They're not trading at all-time highs, too. I don't see any reason why they wouldn't be, with everything else trading at all-time highs. And with the Fed, committing to, just continuing their money printing. So, yeah, that one, my call spread is basically targeting, I think IWM is going to make a new all-time high, or at least hit the prior all-time high. That about does it for our options order flow, and that does it for our market recap video. Hope you all survived Fed Wednesday. We all made it through the big earnings. So now, hopefully, smooth sailing ahead. That being said, I will see you all tomorrow in our pre-market session.